everybody. This is Paul Sion with United Real Estate Home Connections, licensed in the state of Ohio and Kentucky. And with me today is Trey Budke with USA Mortgage. How are you doing today, Trey?
I'm good, Paul. Appreciate you having me here today.
Glad to have you on. Today we're going to be talking about the VA mortgages, and to kind of start that off, why don't you tell us about your background in the military?
I spent 6 years in the Marine Corps, 89 to 95. Was a radio operator with Com Company Headquarters Battalion. So seen both coasts, had a deployment to Honduras during Desert Storm, and then got out in 95 and finished up school at University of Cincinnati.
Okay, nice. So what got you into mortgages then?
I really got into mortgages by accident. I was actually working at Fidelity Investments at the time, and the girl I sat next to, her boyfriend at the time was a mortgage sales manager and at Fifth Third. And I just was seeing what he was doing, and it was kind of interesting. And after about a year, he invited me to an open house, and I probably started about 2 weeks later, and here we are pushing 24 years later, and I'm still doing mortgages.
Nice.
Yeah.
Did you start specializing in VA mortgages in a certain time?
No, Paul, I really didn't. So my first half of my career, I always worked at a bank.
Okay.
And I always sort of had a community product available, which would be a low down payment program or a no down payment program. And back then, the banks just really weren't doing government lending. So I didn't do FHA or VA back then, probably for the first 10 years of my career. I got into the VA lending probably coming up on 5 years now.
Okay.
Then that's from having done literally no VA lending to where it's about 80% of my business right now.
Very nice. Yeah, so I know your branding is VA Dude. Tell me about that. How did that come up?
Because of some of the other things I was looking for were no longer available. So I just wanted something that people could remember without having to write it down. And the VA Dude was available, and that's what I became, and that's kind of how I market. It's pretty much how I market exclusively. So I'm at the point now where, as I said, I do about 80% VA. I still do FHA, I still do USDA, I still do conventional lending. I'm not turning that stuff away, but my heart, my passion is helping the vets, and so that's what I've been specializing in, and that's really the only thing I market at this point.
Great. Yeah, and so just to elaborate a little further, VA is the Veteran Administration Loan. It's specifically for veterans. Tell us a little bit about that. What are the basic qualifications of it?
So it's for veterans or active duty or reserve or guard. So you don't necessarily have to be a veteran. You can still be in. But there's different requirements depending on whether you're still in the service or whether you're a veteran. So it's a little different between guard and reserve and active duty. So an active duty veteran is, they're eligible after 2 years of serving their full contract. And when I say 2 years, everything's not etched in stone. There's always
some
exceptions. Yeah. So if someone was discharged with a disability, something got hurt on the job, it really depends. So if someone came to me and said, hey, I served, 18 months, that's a weird amount of time to serve. So I would think something probably happened. So I would get their certificate of eligibility to see, that's the final thing that determines whether they're eligible or not. But anyways, so active duty, the standard is 2 years. Guard and reserve is after serving their first enlistment, which is a 6-year enlistment, unless they've been activated, called to active duty. In the case of the reservist, it would be after 90 days.
Okay.
They would be eligible. And in the case of a National Guardsman, because they actually report to the governor before the feds, they have to be called to active duty under federal orders. So Title 10 orders.
Okay.
So if they're called under federal orders, then they're also eligible after 90 days.
Okay. My understanding, too, there's certain cases, too, where the spouses are eligible. Are you familiar with that?
Yeah, so the only the spouse is going to be there's a surviving spouse eligibility. So that would be the only time when a spouse is eligible without the veteran actually being on the loan.
Okay.
So in the case of a surviving spouse, and that would be a surviving spouse of someone who was either killed in action or died as a result of a VA related disability.
Okay.
So just because you're married to a veteran and they pass away, that by itself wouldn't make you eligible.
Okay.
They would have had to have died as a result of their service.
Okay. And you mentioned eligibility earlier and the determination of eligibility. What's the process for that?
So the easiest thing to do is to actually myself or my assistant will reach out to the VA and see if the veteran's certificate of eligibility is available electronically. Right now, I would say probably 80% of them are, which means I type in their name, their social security number, and their date of birth, and instantly we have access to their certificate of eligibility. If they're part of the 20% roughly that aren't available electronically, then we need to provide a little more information to the VA, and that's usually their discharge paper. So in the case of an active duty veteran, it'd be their DD-214. In the case of a reservist, it would be their retirement point statement.
Okay. What do you think the best advantages of the VA loan compared to the other types of loans out
So
there?
the biggest obstacle in home ownership, in my opinion, is down payment. That's the thing that stops people, and the VA makes that obstacle go away. It's a zero down payment loan option.
Okay. Yeah, that's compared to your even your FHA has a minimum of 3.5.
Yep. Even so, some of the lower down payment options, 3.5% on FHA. There's a conventional option at 3%. The other big advantage that I like about the VA loan is that there is no mortgage insurance on it.
Yes.
So typically, FHA's got mortgage insurance. Conventional loans has mortgage insurance if you're not putting at least 20% down. So you end up, apples to apples, you're going to end up with a lower monthly payment using a VA loan.
Okay. Yeah, definitely advantageous for those veterans who are eligible.
It's a great benefit.
Talking about the VA loan itself, I know there's a funding fee.
There is a funding fee. That is how the VA keeps the program going. It's how they self-insure, if you will. The funding fee is 2.3% for the first time use, and it's 3.6% for subsequent use. So what I'm saying there is that, yes, you can use the VA loan more than once. Even though it's a zero down payment loan, again, there's still the funding fee, but the VA does let you finance that funding fee. So most people will put that into the loan amount. And just on a side note, the appraisal does not have to cover that additional 2.3 or 3.6%.
Okay.
Now, good news is there are a lot of veterans that are going to be eligible to have that funding fee waived. So if you have a VA disability rating of 10% or higher, that entire funding fee is waived.
That's a great benefit.
It is, and it's a huge percentage of the veterans that I'm running across.
Okay. So you mentioned 2% funding fee for the initial, and
2.3,
2.3, and then 3.6
3.6
for the second. How does that apply in terms of refinance if somebody wanted to refinance?
So refinance is totally different, and the big refinance that most people are doing with a VA loan is an interest rate reduction loan. So it's a loan strictly to lower the interest rate. They're not borrowing extra equity out of the property. They're not paying off additional debts. In that case, it's just a 0.5% funding fee. Same thing though, they waive that with the 10% VA disability rating.
Okay. Bringing up the refi, I mean, you mentioned no cash out and that interest rate reduction. Let's say they didn't want to do that. Let's say they wanted cash out. Can they do that with a VA loan?
They can. The rules have changed this year. It used to be 100% of the equity in the property they could draw out. At this point, it's capped at 90%.
Okay. And let's go over a little more about the getting more than one VA loan. From my understanding in the past is, I've got my VA loan in my house, and that's the only one I can get. So
So there's a lot of misconceptions about it, and I think most of the misconceptions are probably rooted in a truth that existed at one time or another.
Okay.
When the VA loan first came out, it pretty much was a one and done loan. But right now, you have basic entitlement, and I don't want to get too into the math of it, but you have basic entitlement and you have bonus entitlement. And then together you have a total amount of entitlement. So as long as to simplify things, as long as your two loans together don't go over the total entitlement, then you would have room to have two loans possibly going at the same time. Now, that would be like if I bought a house and then decided, a couple years later, we need a bigger house and we want to retain that house as an investment property. So that's the example I'm giving, that you could have two going at the same time. As far as reusing it, though, most people are selling their homes. That pays off the loan and that restores their entitlement. So there's no limit to the number of times you can use the VA loan.
Okay.
I mean, you use it 3, 4, 5. Again, over the lifetime, there's really no limit.
Okay. Talking about that over the limits, basically, is there a max loan amount for VA?
Yes and no. So there always was a max loan amount, which would be the county loan limit. And that's set pretty much across the country.
That's similar like the FHA?
Well, no, it would go with the conventional loan. So like right now, $540,000. However, again, there were some changes to the VA loan at the beginning of 2020. And one of those was that if a veteran has full entitlement, so they could have used their loan before, but entitlement's been restored. So basically they don't have an outstanding loan right now, or they didn't have a loan that resulted in a loss to the VA. So like a foreclosure or a short sale, something like that. So as long as they have full entitlement, there is no loan limit currently.
Okay.
So theoretically, you could buy $1 million house with zero down. And if you had a 10% disability rating, you would pay no funding fee as well. Now, when I said yes and no, the no part is that, or the yes part, that there is a limit, is if they do not have full entitlement. So maybe they had a loss at one point, or they currently have a loan outstanding. At that point, then they are capped at the current county loan limit.
Okay.
So for 2020, it's like $540,000. They did just announce the new county loan limits that are going up next year, and I apologize, I don't have it memorized yet.
No worries. So in the case, let's say we've got a doctor. He's a veteran. Did his 20 years in the service, retired, has veteran status. They want to buy $1 million house as a nice post military house.
Yep.
Do they get that 0% down payment option, or do they have to come up with a greater?
No, there's zero. If he has full eligibility, he can buy that house with zero down.
Oh, that's pretty impressive.
It is. It definitely is.
So another interesting feature of the VA loan, which not many people know about or talk about, is the ability to sign the mortgage. I mean, are you familiar with that and how that works? Get rid of the mortgage, but I can assign it to another veteran.
So it can be assumed.
Yes.
Yeah. So yes, in some instances, the potential buyer could assume my current VA loan.
Assuming they're a veteran as well, too.
Actually, there's two ways of doing it. So one is they're a veteran, and then one is that they're not. It's not something you see a whole lot of today.
Okay.
I think it was something when rates were a lot higher,
Made
and
more
the
sense
VA
then,
loans were a lot lower, that it was used as a selling tool. I don't run across it very often.
Okay. I mean, you brought up interest rates. How are the rates compared to conventional mortgages or FHA mortgages?
So I'm seeing VA rates, and just like conventional, just like FHA, the rate's going to be based on credit score. So it's a credit score driven, risk-based pricing. But if all things being equal, I'm seeing the VA loan being priced a quarter to an eighth better in rate.
Okay. And then you mentioned credit. How about credit in terms of comparing, the credit requirements for conventional FHA?
Yeah,
VA?
so we're in a post-COVID world right now. What we can do today versus what I could do, say, in January, are different things. However, I think we're getting closer back to where we started, so I'm getting a lot of my options back.
Okay.
Credit wise, so the VA does not set a minimum credit score. That is a complete myth. But that doesn't mean a lender won't set a minimum credit score.
Lenders have their own rules.
Yeah, lenders, it's an overlay, basically.
Yeah.
It's a lender applied overlay. It's the risk they're willing to take. But so I'll hear veterans talk about it. Oh, you need a 640 credit score to qualify. You need a 660. And that just simply isn't the case. You may need that at the lender they talk to, but that doesn't mean that there isn't funds available out there. So right now, I can go down to a 600 credit score on a VA loan, which is the same as an FHA loan right now. Conventional, I need to be at like 640 at least.
Okay. So we talked about buying your own home. I mean, could you buy an investment property with it? I know there's owner-occupied rules.
Yeah, there are. So the VA home loan benefit is for an owner-occupied property.
Okay.
There's a way to kind of combine the two, though, because it does allow you to buy up to a 4-unit property. So a 1 to 4 unit property, as long as one of the units is occupied by the veteran as their owner-occupied property, then the other 3 clearly can be, used as investment.
And that's a good way for the house hack, the owner, to pay for their mortgage at the same time.
Phenomenal way to get into investment properties and pay for your mortgage. Absolutely.
Yeah, it definitely were the options available. Thanks for that information. Let's talk about your process. Let's say I'm a first-time home buyer or veteran. I'm coming to you. I want to buy a house. What can I expect from that first sit down?
I mean, the first thing we're going to do is talk about your personal situation because everybody's different. I'm going to pull credit. I'm going to look at your income versus your debts, kind of see what you can afford. I'm going to have my assistant pull the certificate of eligibility, which will tell me how much eligibility you have. And it will also actually tell me if you have a VA disability rating or not. So I'll know if the funding fee is applicable to you or not. At that point, it's documenting what we talked about. Pay stubs, W-2s, tax returns, that type of thing, basic things. And then I'm going to run it through our automated underwriting system. Basically, at that point, if I can prove what I entered is correct, we're waiting on an appraisal and title. So it's pretty straightforward from a standard, but of course, again, everybody's situation is different. So in the VA, there's a lot of quirks and things that you can get done with the VA loan if you know what you're doing. So to me, it's not a loan that you dabble in. You either need to really learn it, or not mess with them at all. Is my personal opinion. I won't do 203K loans.
That's a
rehab loan.
Yeah, that's a specialty in and of itself.
Because it's a specialty.
Yeah.
Exactly. That's exactly right.
So talking about rehab loans, the VA doesn't offer anything like that.
Well, they actually do.
They do. Okay.
However, right now it's on hold during the COVID pandemic.
Okay.
But prior to that, there actually is a VA rehab loan, and there's also a VA construction loan.
Okay.
Now, again, not all lenders offer them, but the VA absolutely supports them.
Okay.
Just like properties. So I'll hear a lot of talk in a lot of veteran groups and see a lot of guys, talking about their experiences. And I will see veterans, almost weekly say that you can't get a manufactured home with a VA loan. And that's just absolutely not true.
Okay.
Not every lender will do it.
Just finding the right lender.
But the VA absolutely will support it.
Is that something you do?
It is, actually. Yep.
Okay.
I probably have a VA a manufactured home going at least. I have one going at all times.
Okay.
Yeah.
Yeah, that's good information, helpful to know. Going back to your process too, if somebody needs help with they're new, maybe they got some dings on their credit,
Yep.
Or is that something you can counsel them, guide
It
them on?
is, and I would tell you that the VA is way more forgiving than any other loan. VA underwriting is about telling a story and seeing if it makes sense. The ultimate goal is to get the veteran in a home and to protect the veteran's interests. So VA underwriting is not about how can we turn a loan down. My experience has been it's truly about how do we help the veteran. So that being said, credit standards are a little, in my opinion, lighter. As an example, FHA looks at usually the most recent 24 months, especially when you're doing what's a manual underwrite, which is when you don't get that automated approval. That doesn't mean you can't do the loan. It just means you got to fit things in a box, basically.
Okay.
So FHA is going to look at the last 24 months really closely, where the VA is going to look at the last 12 months really closely. So you may have had some issues in the past, but if I can show, for 12 months that you have paid everything on time, haven't taken out any new derogatory debt, collections, liens, anything of that nature, and you've got at least a 600 credit score at this point, you very likely could get a loan. Yeah. So again, every situation's completely unique, so it's hard to just say, oh, if you have a 600 credit score, you're going to qualify. You may or you may not. It really depends on what's driving that credit score.
Yeah. And at the same time, too, is that something somebody comes in and I've got a 600 credit score. I'm not ready to buy now, but in 6 months, can you help me out? Can you guide me?
Yeah, so I do that a lot, actually. I've had closings this year that I probably started talking to the customer, a year and a half ago. So that's pretty frequently that happens. And I know enough about the credit to, when it's real obvious things, to say if you do this and this will do this to your score. And it may be something as simple as you don't have a lot of credit.
Yeah.
And maybe it's getting, adding a secured credit card and paying that on time for 3 months. That may be enough to get your score where you need it to be. So it could be something real simple like that. Once they start getting real complicated, lots of collections, tax liens, at that point, honestly, I'm going to probably refer them out for some professional credit help.
Okay. Yeah, that's always helpful, too, in certain cases.
Yeah.
All right, great. That's all the questions I have for today. Do you have any final thoughts?
No, Paul, I appreciate you giving me the opportunity to talk about the VA loan. It's what I do. It's what I love. And I think it's a great opportunity for vets. If anybody needs help, I'm happy to help them.
Yeah.
And by the way, you said where you were licensed at the beginning. I'm licensed in Ohio, Kentucky, Indiana, and Pennsylvania.
Okay, great. And even for outside states, I'm sure you've got people in your network that you can refer them out to.
Absolutely.
Okay.
Absolutely.
That's great. Thanks for being on, Trey.
Appreciate it, Paul.